retracement tool. But on the other side of things, ads is what's called the trend-based Fibonacci extension. And if you've been watching our videos here at UTG or our daily updates, you've seen that we've relied heavily on this. Why? Because while Bitcoin is in a level of what's called price discovery, there is no previous trends or data looking left. There is no level where Bitcoin has been this like this beforehand. So you need to be able to see, I guess, levels in the future where Bitcoin might hit and pull back, or levels where you can either A, take profit or look to short a particular area. And you can see here, we've just drawn this in just now, and we'll explain how to do it in a moment. And you can see the accuracy of these levels is pretty stupid, to be honest. So this is available on TradingView. So what it's done, it tracks a price primary moves and its retracement. So the resulting price levels are drawn on the chart represent potential support and resistance in these moves. So that's a very good way of putting it. You look for these levels as either A, resistance levels, or B, support levels, depending on whether we are in an uptrend or a downtrend. And the Fibonacci extension tool is also used in conjunction with Elliott waves and a few other things as well, Wyckoff, but we won't get into that. If you want to know more about Wyckoff, you can go to unitytradinggroup.com/Wyckoff videos, guys there and everything. All right, so Adz, let's talk about how we would use this Fib extension tool, particularly with Bitcoin, and it's more relevant than ever. Than what it is now, because we have no history to tell us where Bitcoin might roll from here. So this is a really, really great tool for that.
It is, and unlike the retracement tool, it's a price discovery tool. So if we don't have any prior data to the left-hand side to really draw support, resistance, supply or demand or anything like that, we can use it to gauge price action to the upside and where that upside potential will be, or where we can find further resistance to the upside. So there's always ways to look at where price will go eventually. And the way we draw it in is exactly the way I have. We look for the nearest swing low, and then we draw it to the swing high, and then we look for the retracement to give us that third level that we draw in. So 1, 2, and then 3 down to here, looking at the price action to do that. And of course it will display all of the levels above us and of course below the price action as well, if we're in a similar situation to what we are now. Now, what I'll do is I'll bring up our settings, and you can watch this video back, and you can pause it, and you can view those settings or copy those. But in any case, if we are, like I said earlier, if we are to move to the upside, break this 41,384, going off these fibs, and the fibs have been respected quite nicely, as we can see the price action to the left of us, and of course this candle currently respecting the 786. If we are to see this movement to the upside over the course of the next few hours to tonight, we could expect it to head up to 44,876 at 1272. That's the next major Fibonacci extension, or Fibonacci trend-based Fibonacci level that we've got to the upside. So it's very easy to use. Basically swing low, swing high to the pullback, and we look for the levels above us or below us for support or resistance tie.
Yeah, and people might be saying, if you're unaware of using this or whatever, they'd say, well, if you're talking about swing lows and swing highs, then why wouldn't it be this one and then this one and this one? What you're looking for is significant swing lows and significant swing highs. You don't want to do these sort of intermediate consolidation levels. You want to look for these big bad boys where we've had a decent pullback, because we know that's a significant level that we now need to break in order to continue this bullish sentiment or this bullish uptrend. And you can see again here where the 50 fib was significant and the 61 fib was significant as well. So we know that when we get past these sort of psychological levels or these previous high levels, the next sort of significant levels that we often find, yes, it's the one level, but these levels are often pretty significant, and particularly this 1618 extension. When we previously had our fib extension tool drawn on BTC back down at the sort of the 20K level, that 168 was just a huge barrier for BTC, where we broke above, we came back down, we retested, we consolidated, and the same again for the 1272. This is significant in the Elliott wave sort of world, but for what we find in price discovery, at least from my own experience, that 1618 is a very significant level. We actually ran out of fib extension numbers on the previous Bitcoin TA that we did using this particular tool. So the key is to find the significant swing lows and the significant swing highs. So then obviously it displays all those price levels. The 50, the 61.8, similar to the retracement tools, are pretty important as well. And yeah, it's a very, very handy tool. There isn't really a great deal more to tell about that because it's quite a simple tool in its in its essence. One really good thing to do is if you want to put on Unicon ads. A very good thing to do is, in my opinion, use this with a moving average tool. So on the screen here now, we've got Unicon, which is one of our custom indicators. You know that when sort of price consolidates in this cradle sort of level, it's a pretty powerful reversal signal as well. And you may be a breakout trader or you may be a pattern trader, depending on how you're looking at this as well. And when we are pulling back into these significant levels, the 38, the 50, you can gauge the strength of those pullbacks, whether they are significant or whether they're just going to be small consolidations before a continued move to the upside, by using something like your moving average to see if we are still in a short-term uptrend or whether your moving averages have crossed and we may be indeed heading back down towards the original wick down in price. So yeah, that's the Fibonacci extension tool. Really simple to use. Even if you use it in conjunction with something like steamroller ads, if we bring that up on the screen, when we are having pullbacks into these significant levels, are we at a level where steamroller or your oscillators are telling you that we may be ready for another move up? Are we going to be pulling back at these particular levels? Is our CCI or RSI telling us other things? We've got a little bit of divergence there. Use that with your own oscillators and apply that to your own trading strategy. But for a lot of these altcoin pairs, whether it be LTC, F, that are heading towards levels where they're unseen before, F more so, this is a really, really great tool.
Just to answer the question that's come through, usually focusing on the 61 and the 50 on Fibonacci, is there an equivalent on this one? If you're, for example, on the Fibonacci retracement tool, you'd really be focusing on the 38, 50, 61 for those three key levels are really going to give you the best results if you're looking for further movement to the upside. With the trend-based fibs, it's really about price discovery. It's really about looking at price above you to see where it would go, because you don't have any data to look for. You don't have any left-hand data to really gauge where that's going to be. So it's really got a different purpose. If we're looking at retracements or buying opportunities for this, you probably wouldn't have this on the chart. You'd be looking at swing low to swing high, and you'd be looking at the 38, the 50, and the 61 on the way down to really gauge if you're going to continue up. This is really for, it can be used that way. It can be, you can put the orders on the 61, the 50, and the 38. Of course, it can be used in the same sort of regard, but the levels aren't going to be in exactly the same spot. And you're probably going to get a little bit of a different answer every time you draw it. But you can use it in that way. However, it's more suited for price discovery and where we're going to go above this in terms of higher highs and price action that way.
Yeah, nothing is ever exact. As we always say, we're using these tools to gauge areas of interest, not exact levels. And then when you can use them in conjunction with something like supply and demand, or your oscillators, or your moving averages, for example, you're painting a narrative, or you're creating a narrative based on what those oscillators and everything is telling you to confirm a bias.